Hi, my name is Akira Takada, and I am joined today by Luis Santa Cruz. Hi, Luis.
Hi, Akira-san.
We are both in KPMG's Department of Professional Practice. Over the next few minutes, we will talk about an update on the FASB's disclosure framework. First, let us begin by reviewing what the disclosure framework was to refresh our memory before we talk about the update.
The FASB initiated the Disclosure Framework Project in 2012 in response to feedback from several constituents. Some stakeholders believe that not enough information is provided in the financial statements that are material and relevant to the users. Others believe that disclosures described in the codification must be provided even if the related information isn't relevant, resulting in disclosure overload. So the notes to the financial statements don't always effectively convey the information most important to users.
The objective and the primary focus of this project is to improve the effectiveness of disclosures in notes to financial statements by clearly communicating the information that is most important to users of each entity's financial statements.
So Akira, does that mean that the FASB is trying to reduce the volume of the notes to the financial statements?
Good question, Luis. Although reducing the volume of the notes to the financial statement is not the primary focus, the board hopes that a sharper focus on important information will result in reduced volume in most cases.
So the FASB is addressing this by taking two actions, which are the board's decision process and the entity's decision process. Let's take a look at them in the next slide. Here's the FASB's action. First, it's adding a new chapter to the conceptual framework for financial reporting, Chapter 8, Notes to the Financial Statements. This is the board's decision process. The chapter is intended to help the board identify information that could be appropriate for inclusion in the notes to the financial statements and relevant to users, when setting disclosure requirements and new standards, and evaluating an existing disclosure requirement. The disclosure chapter includes decision questions to be considered by the board to that effect. The FASB issued the exposure draft of this chapter in March 2014. After discussion, the FASB tentatively decided to change the description of materiality in concept statement to explain that materiality is a legal concept, and that it would not distinguish between a minimum and expanded set of disclosures when setting disclosure requirements.
And secondly, it's focusing on role of materiality for disclosure purposes. That is the entity's decision process. It's intended to promote the appropriate use of discretion by preparers because disclosures are not a one-size-fits-all. It is all based on the entity's specific facts and circumstances, and disclosures that is relevant for one entity may not be for another. The FASB proposed amendments that focus on role of materiality in 2015. The objective here is to enable preparers to move from the checklist compliance mindset and instead focus on effectiveness of information that entities communicating in the notes to the users. To accomplish this objective, the FASB believes amendments are necessary in both the conceptual framework, namely in its existing Chapter 3, Qualitative Characteristics of Useful Financial Information, and in the codification, specifically Topic 235, Notes to the Financial Statements. In the conceptual framework, the board proposed that materiality would be a legal concept, that the FASB would currently observe the U.S. Supreme Court's definition of materiality in the context of anti-fraud of U.S. security law, and that materiality would be a living concept that can change based on executive, legislative, and the judicial actions. In the codification, the FASB proposed that the disclosure requirements need not to be applied to immaterial items. That means that omission of immaterial information would not be an accounting error. The board is also proposing that materiality would be evaluated for possible disclosures individually and in the aggregate, considering both quantitative and qualitative factors in the context of financial statements as a whole. This would mean that an entity may determine that some or none of qualitative or qualitative disclosure in the topic is material. The board will consider feedbacks on the exposure draft at the future meetings.
Currently, 4 disclosure areas are being assessed as part of the Disclosure Framework project. The board's decision process and the entity's decision process that we talked about in the last slide are being used to modify the disclosure requirements in these topics. Also, FASB is evaluating disclosure requirements for interim reporting.
The FASB has issued 4 exposure drafts. We addressed topics that the FASB had issued proposals during previous sessions, which are defined benefit plans, fair value measurements, and income taxes. This time, we are going to take a look at the proposed changes to the requirements for inventory.
The exposure draft for inventory was issued in January 2017, and the comments were due on March 13th.
The amendments in the proposed update would modify the disclosure requirements for inventory. The proposed changes would add new disclosure requirements and change existing disclosures about inventory balances. On this and next slides, we have summarized the proposed requirements and modifications. In summary, the proposal would require a company to disclose how different types of inventory might affect future cash flows. If the company uses the retail inventory method, qualitative and quantitative information about critical assumptions used to measure inventory at the end of each annual period presented, and inventory balances by segment if the information is provided to chief operating decision maker. This one is applicable to public entities only.
The amendments in this proposed update would be applied prospectively. The effective date will be determined by the board after it considers stakeholders' feedback on the proposed amendments.
For the detailed information for the disclosure framework, please refer to the defining issues. They are available for download on ARO. Thank you for listening and have a great day.